jump in here. All right, he's got it. Perfect. All right, well, welcome to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com. We do these webinars each week on Monday nights at 7 p.m. We do these for Nadex. And Apex and Nadex completely different companies. Nadex is not owned by Apex. Apex is not owned by Nadex. Nadex is an exchange. We here at Apex, we're an online community of traders helping traders. So we do these educational and informational webinars each week. Sometimes we go through, we cover very basics. You know, Nadex offers basically two different products. They offer binary options and they offer spreads. And we've been talking about both of those over the last couple weeks here. We've started over and kind of gone through the basics of what is a binary, what is a spread. We've talked about some misconceptions of binaries and spreads, making sure to choose the right binary or spread. We've gone through and talked about, you know, in the money and out of the money and at the money, and showing how there's there's a lot of different options to choose from of the various binary and spread contracts with Nadex, and how having a good understanding of, you know, why there are different options and different expirations and the difference of in the money and out of the money, how that can make a big difference. You might have a great strategy, a great system, but if you're choosing the wrong instrument or the wrong contract, might not always work out for you. So if you've missed any of those over the last few weeks here, definitely, yeah, Jared says that could be me. Exactly, because you back test on a system and looking at your chart and you're like, man, you know, this system works great. You know, whatever charts or strategy system indicators I'm using, giving me a good directional, you know, notification of, you know, where the direction's going, where the trend's going, but I seem to be losing. I don't seem to be making money properly. A lot of times that can be because you're choosing the wrong binary or the wrong spread. Okay. Eric says, yep, that was me all last week. I'm able to call the direction of the market, but for some reason I wasn't winning. Maybe you're not giving yourself enough time. Maybe you're not choosing the right strike or the right binary or the right contract of a spread. So if you've missed some of those webinars over the last couple of weeks, hop on over to nadex.com. You can go through the video archives and you can catch up on the last couple of weeks here. And it could really make a huge difference in your trading. And there was a lot of people on that webinar. It was kind of like I did a webinar on that, on misconceptions of spreads and choosing the right spread. And then I did the same on binaries of choosing the right binary. And, you know, in the notes here and in the comment box, it was just like light bulbs going off. People going, oh, I get it. People like, now I see what I'm doing wrong. I've always been choosing that wrong one. Makes sense. So it's definitely kind of an eye-opener, light bulbs going off, a couple webinars there. So if you missed those, definitely catch up on those, because it will also help you make a little more sense of tonight's webinar. We're not going to have a ton of time tonight to really review the basics, kind of 101, what is a binary, and we're going to just briefly touch about, you know, in the money and out of the money binaries. What we're going to talk about tonight is a couple of actual strategies, okay, what we call strangles and butterflies. I'm going to show you a couple of actual trading strategies that we use on binaries. There are two really cool strategies. You will have to have a good understanding of what a binary is and how it works, and the difference of in the money and out of the money. So again, we'll cover that briefly, but check out the last couple of weeks webinars here. So let's knock out our disclosure so we can get rolling. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Any trading decision is your sole responsibility. Information in this webinar is for education and informational purposes only, and not an offer or solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. And past performance not indicative of future results. Okay. Jared, you say, why does Nadex no longer offer 20-minute binaries? They do. They still offer the 20-minute binaries. 20-minute binaries are available during the daytime on the 4 U.S. indices, and they're available at nighttime on the Nikkei, okay, on the Japanese stock index. Okay, so 20-minute binaries have only ever been offered on those particular instruments, and they are still available. Okay, for everything else, you've got weekly, daily, intraday, and then on some of the Forex pairs, you even have 5-minute binaries. Okay, but the 20 minutes are still available. We trade them every day on the 4 U.S. stock indices. And I'm going to show you some examples of 20-minute binaries tonight, actually, as well, on one of these strategies here. So like I said, hop on over to Nadex.com. You can read through, get some general information about binaries and spreads. You can also open up a free demo account. Nadex will give you a $25,000 demo account. Just takes a minute or two to apply for that, and you get a demo account. You can hop in there and get familiar with the Nadex platform, the different instruments that they offer as far as on the different stock indices and the Forex pairs, commodity pairs. Practice entering and exiting orders, and try out any new strategies or systems. In fact, the ones I'm going to show you tonight, I'm always going to tell you, hey, don't just jump in and start trading these with live money. Practice them, demo trade them, get them down in your demo account, master them there, be profitable in demo. Then you can hop on over into your live account. So hop over to Nadex.com, get yourself a free demo account, and then from there, hop on over and check out our site. Go to apexinvesting.com. You can sign up, get an absolute free basic membership. Just create a username and password. Literally hundreds of hours of free education, step-by-step training courses on binaries, spreads, multiple different strategies and systems. The two I'm going to touch on tonight, you can hop on over to the website, go to the binary section, and you can watch more in-depth webinars and training on them, showing you a little bit more what we're looking for if you're really interested in them. I'm just going to kind of open your eyes to the concept of them tonight. We're not going to get into detailed training as far as exact entries and so on. But you can hop on over to the website if you like what you see tonight, want to try it out, you can hop on over there and check it out. Got some free scanners, free deviation levels, show you how to get free charting platforms, free futures data, Forex data, all kind of great stuff. So take advantage of the free stuff that's available to you. Get the free demo account, get the free education over there. While you're at it, go to facebook.com/apexinvesting. Like us and follow us on Facebook. Once you've liked us, you'll see a little button on your page that says liked. Just click it. This box will open up. Make sure you click right here, all posts. That way you get all the notifications. The Facebook page is a really great place to keep up with some great information. We always post stuff on there about new strategies or systems, trades from our trade room, news events coming up you need to know about, upcoming webinars. So make sure to click on that so you get all of the notifications there. Okay? So tonight we're going to touch briefly on butterflies and strangles, talk a little about how to determine the market conditions, what is range-bound trading, how can you potentially profit from both buying and selling two different binaries at the same time. Okay? And we're going to talk about when to get into trades, when to exit them, and some risk and reward. Okay? Let's see here. Yeah, Ron, they don't have that on there live just yet. I haven't got a recent update about that, but I'm sure Nadex can fill you in on that as well. Let's see here. Jared, yeah, like I said, those are only available during the day on the U.S. indices, and I don't believe they're available tonight on the Nikkei until after 8 p.m. All right, we'll take a look at it at 8 p.m. I believe that's when they open up, is 8 o'clock, when the Nikkei gets rolling. All right, so talk to you about where you can get some free education, and where you can catch up on the last couple webinars if you might have missed them. And so what are binary options? We know that binary options are short-term, fast-moving contracts. At expiration, binary options are either worth 0 or they're worth 100. You can hold a binary until expiration, or you can exit early. Okay? So let's talk about that for a minute. I want to knock that out because I get questions on that all the time. Even some of you that are familiar with binary options through some of these other brokers or overseas brokers, we don't mess with that. We're only we only trade with Nadex, that's US based and US regulated. So you might not be familiar with that concept. Some people always say, hey, I understand that a binary is worth 0 or 100 at expiration, but what do you mean exit early? Well, with Nadex, you can exit a binary early. Well, how do I do that? Well, it's very simple. Let's just say we were looking at the euro dollar. We've got these binary contracts right here that open up at 6 p.m. and they expire at 8 p.m., right? So let's just say, for example, that I'm going to, actually let me choose these 9 p.m.s real quick here. So let's just say, for an example, that I'm going to buy this binary right here. Okay, so I open this binary contract, 1.1319. Right now I can sell it for 26, or I can buy it for 34. So let's just say I want to buy it. Okay, and so I buy it, and let's see here. Oh, I think I did that wrong. Hold on one sec. Give me just a second here. All right, so I bought the contract. Okay, and it's right here in my open position. See, the order executed, I bought it. Notice it says +1. That means I bought it. If I had sold it, it would say -1. Okay, exactly, Enrico. Yep, we stay away from those overseas binary options. Okay, so I bought this contract. I bought it for $34.75. If I hold it till expiration at 9 p.m., well, at expiration, it will either be worth 0 or worth 100, right? Because what did I buy? I bought the euro-dollar contract stating the euro-dollar will be greater than 1.1319 at 9 p.m., right? So if the euro-dollar is greater than 1319 at 9 p.m., this binary would be worth $100. So I bought it for $34.75. If it expires in the money, it'd be worth $100. If it expires less than 1319, then the statement is false. It did not happen. The event did not happen. The binary will expire at being worth 0. But between now and then, I can exit early. All right? Well, what do I mean by that? Well, let's look here at these binaries again. So euro-dollar binaries expiring at 9 p.m. Well, again, we've got a bunch of different contracts here, right? All these different strike prices, and here's the price that I can buy them for. Here's the price I can sell them for. Okay? Well, and which contract did I buy? The 1319. This one right here. So I bought it. What can I sell it for right now? $27. Well, I bought this contract, so I'm saying that I think the market's going to go up. So let's say the market goes up, and it goes up, several pips. And let's say suddenly this turns into $70 that it can be bought for and $60 that it can be sold for. So I don't have to hold it all the way to expiration until it's worth $100. Okay, I bought it for like $34. Let's say that the market starts to go up and the value goes up and I can sell it for $65 or $64. So I bought it for 34. At that time, whatever this price is here, I can sell it for, and I can keep that profit difference. Okay, so I can exit early. I don't have to wait until expiration. And it's very simple. I bought this contract, all right, and for me to get out of it, I can hold it to expiration, or I can sell it early, right? So if I bought something, the way to get out of it early is to what? Sell it. So all I have to do is just click it. You see this green button? I just click it. It automatically opens a ticket already marked sell, right? Because it knows if I bought it, I'm clicking it to get out of it and sell it. And it automatically fills in the price for whatever the current price is that I can sell it for. And I hit enter and I sell it and it's gone, okay? And the difference of what I've made or lost is added back to my account, okay? So that's it. That's how you get out of something, okay? Let's see here. I believe that will always load as 1, Jared. Okay. There is a way you can do that. If you ask us over in the Apex site, we can get you some information about that. Okay. George, yeah, what that is, let's say you bought one, what is average price? Let's say you bought one for 30 and then later on you bought another one for 50. So it's just going to show an average of 40. Okay, it just averages out if you got multiple contracts at different prices. Okay, so everybody saw that, right? We can exit early. We don't have to hold until expiration. And that's very important to understand with some of the strategies I'm about to show you here. Okay, that you can exit early. That's very key. So let's talk about in the money binaries real quick. All right. Let's real quick talk about the difference of, the different binaries here. So we know that at expiration, a binary is either worth 0 or worth $100. right? And we know, let me just find something. Let me find a different one to show you something real quick here. All right. So we know that a binary is worth 0 or 100 at expiration. We have what's called at the money binaries, which means, hey, if the binary strike price is right close to the same as where the market is, binary is going to be priced around $50. Look right here. See, this strike price is 109.06. The market's at 109.07. So see, these are around 50 bucks. Okay? So these way up here that are priced real cheap, like $18, well, that strike price is 109.26. So if we bought that, we're saying that at 9 p.m. the market will be above 109.26. Well, the market's only at 109.07, so it's got to go up 19 points, 19 pips, right? Okay, that's what we call an out of the money binary. All right, that's why it's priced so low, because there's not quite the same percentage of probability that the market will go up that high, right? It's further away. It's out of the money. That's why it's cheaper. Something that's right at the money, meaning the strike price of 06 is real close to the current market price of 07, so it's priced close to 50 bucks, because at expiration it's got to be what? One extreme or the other. It's either got to be 0 or it's got to be 100 if the market's going to expire above or below it. So when the market's right at it before expiration, it's going to be priced right around 50, because it's still kind of 50-50 probability, right? It's kind of right on the fence, go one way or the other. All right, does that make sense? Right in the middle, 50 bucks. When it's way far out there, the market's got to really move, it's going to be priced a lot lower. Now let's look at these ones that are priced higher. Why is this one priced at $83? It's a lot more expensive than 18, and it's even more than 50. Well, what does the contract state? What is the strike price? 108.94. So if I were to buy this, I'm saying the USD, the dollar yen would be greater than 108.94. What is it at right now? 109.07. It's already greater than. The market is already above this price, right? So as long as the market stays above that price, or keeps going up, or even comes down but doesn't come all the way down here, this binary will win and expire worth $100. So that's why it's priced a little higher. That's why it's priced closer to 100, because the statement's already true. Okay, and we covered this in detail and in depth a couple weeks ago on a webinar, but just kind of wanted to recap that. Does everybody understand the difference of out of the money, at the money, and in the money? When you're looking at binaries on a scale from 0 to 100, does that make a little more sense why they're priced the way they're priced? Something right in the middle, right where the market is now, going to be about 50. Something that's market's already above it, can be priced closer and closer to 100. Something that's way out there will be priced closer and closer to 0. Okay, so that is just some quick basics there. So I want to show you real quick something on a chart. All right, we want to put this into a little bit of perspective. Right now, here's a euro-dollar chart. So let's take a peek at euro-dollar. Euro-dollar, let's just go 9 p.m. Okay, let's take a look at this one right here. 1.1311. Okay. That's 9 p.m. What do we have at 8 p.m.? Let's just take a quick peek here. Okay. So as an example, I just want to give you a really good example here. Trying to find the best one to show you. Okay. Just as an example, this one right here, 1311. Okay. It's priced up at 88 bucks. Now, where is 1311? Okay, 1311 is right down here. But For example's sake, let's just say that the binary is right here at 13.10. If I bought this binary right here, I would be buying an out of the money binary or in the money binary. Because remember, I'm buying right here saying the market will be greater than this. The market's already greater than this, right? So this is an in the money binary because it's already in the money. When I'm buying it, I'm saying the market will expire above it, and it's already above it, right? So what can happen? If the market goes up, if I bought this binary and the market went up, would this binary expire profitable? I win. Yep, exactly, Scott. Okay. If I buy this binary and the market stays right where it is, it's just flat and what we call range bound. The market just kind of tweetering up and down, but it just pretty much stays right where it is. Do I win or lose? Yep, still win. What if the market comes down and it expires at 13.12? Do I still win or do I lose then? Still win, right? I have a lot of options there, right? Okay. What happens if all right, so that's about buying a binary, right? What if I sell a binary right here? When you sell a binary, what are you saying? You're saying that the market will expire below, correct? It's the opposite of a buy. If I sold a binary up here, I'm saying that the market will expire below. Everybody understand that, right? So if I sell a binary up here, is that considered an out of the money or an in the money sell? What do you think? Right, because on the sell side, it's in the money. Because selling, I'm saying the market will expire below. The market's already below, right? So let's just say, for an example, that I could buy, actually, Lori, this up here would be an in-the-money binary if I was selling this. If I was buying a binary up here, yes, it'd be out of the money. But if I'm selling a binary up here, when you sell a binary, you're saying the market will be below it. And the market's already below it. So technically, what if I sold a binary up here in the money, and I bought a binary down here in the money at the same exact time? Two different binaries. Well, and let's just say I could sell this one for $25, which means I'm risking $75 and I could potentially make $25, right? Let's say at the same time I bought this one for $75. So I'm risking 75, and if the market expires above, it's worth 100, so I make 25. So if I sold one up here and at the same time bought one down here, the market can teeter back and forth in here, but as long as the market expires somewhere in between here, do I win on both, win on one, or lose on both? Right, they would both win, right? Because when I buy here, I'm saying the market will expire above here. When I sell here, I'm saying the market will expire below here. So as long as it expires somewhere in between the two, I win on both. Make sense? So if I bought this one for 75, I can make $25 off of it. If I sold this one for 25 and it wins, I can make 25 off of it. So I could potentially profit about, yep, exactly, Scott, about 50 bucks on this trade. That's what we call a butterfly trade. All right? Does everybody understand the concept of that? Of what we're doing there? Okay, and again, I'm just going to cover the basic concepts with you here and show you a few examples. You can hop on over to the Apex site and watch a free video on it on exactly how we do it. Okay, so is this a strategy that I want to use when I'm seeing stuff like this in the market, where it's just kind of a range-bound market and there's not a lot going on? You ever sat down to trade and you pulled up a chart and it's just flat? The market's flat. So we call range-bound. It's just in a range. It's not really doing much, right? And you think to yourself, I can't make money on binaries. The market's not moving. I need the market to go up, or I need the market to go down. Do you? Well, it's called range-bound. Do I want to do this strategy when I see a good, clear trend in the market and there's a lot of volume and the market's going and really moving? No. This is a perfect example right here on this chart, right? When you see the market moving and there's a lot of volume going on, you want to trade directionally then, right? Trend is your friend. You want to follow the market. You only want to go one way, right? But when you have those times where there's nothing going on and it's not moving, instead of saying I can't trade it all, well, this is where I'm showing you how to do a range-bound strategy. Okay, and it's called a butterfly. Everybody understand the concept of that, where we're wanting the market to expire between a range and win on both sides. Okay, so in the money binaries have a higher probability. Why? Well, because like I just showed you, the market can go up, it can go flat, or it can come down, but as long as it doesn't come all the way down, I've got a few options there. So it's giving me a little higher probability within the money binaries. So, for example, and some people, you know, I put here 25 and 75, like in the example I just showed you. You know, some people will say, oh, I can sell one. You know, people do it different ways. Some people say, okay, well, I sold this one for 20. I'll buy this one for 80. Some people say, well, why not get further out and sell for 10 and buy for 90? Okay, well, I'm going to show you why here in a minute. Okay, but approximately what you want to do is look for something you can sell for around 25 and something you can buy for around 75. All right, you know, give or take 5 or 10 bucks, but you're looking for 75 and 25 for the most part, and I'll show you why. And again, these are not for days that the market trends. You want to have multiple plays in your playbook. You want to be able to trade the market when it's trending. You want to be able to adapt to the different market conditions. You want to be able to trade something range bound when the market is flat. Okay, so that's a butterfly. We're selling an upper in the money binary. We're buying a lower in the money binary. Don't get all confused here with this chart. I'm just showing you a quick example here of a chart. Okay, these are some of the various charts and indicators we use over at Apex. So I want to show you a couple things. You see these squares on the chart? All right, you see them? Okay, notice right here at 1500, you know, which is 3 o'clock in the afternoon. See a new square starts, then it goes right here till what? 1520. Okay, remember I said earlier I'm going to show you some examples of some 20-minute binaries. All right, well, here's some examples. Now, very, very big important. Okay, do you see this right here called expected volume? This is a proprietary Apex indicator that we use. You see the yellow line here? All right, see that yellow line? What this indicator does, it looks back over the past months, weeks, days, and time of the day, and it shows us what is the, you know, average expected volume for that day of the week, that hour of the day, those few minutes of the hour. All right, this shows you the normal volume for that exact time frame you're looking at, the yellow line. See these blue shades? All right, that shows you the actual volume. So the yellow line is kind of what is expected to be historically. The blue kind of shows you what it really is. And as you see here, volume's not really exceeding expectations, right? Right here it did. See that? The blue shows, hey, volume's actually right now higher than it historically is right here. But when volume's not really going crazy, that might tell you that the markets are kind of flat. There might not be a whole lot going on, right? Okay. So also notice these boxes here. Not only are they in 20-minute time frames, but the high and lows of the boxes shows you the expected movement of the market. Historically, the market for this time frame, that's normally the highest it goes and the lowest it goes. So if I'm looking at a chart and I'm seeing that the market's not really breaking out of the expected range, and there's not a lot going on with the market, and there's not a lot going on with volume, that might be a pretty decent indicator that it's kind of a flat market time, right? If there's not much going, not a lot of volatility, not a lot of volume, and it's staying in between its expected range, would that maybe give me a little bit of comfort in saying, so if I sold a binary up here at towards the top of the range, saying the market will stay below, and if I bought a binary down here at the bottom of the range, saying it'll stay above, not a lot of volume, not a lot going, that's going to give me a little, more confidence to take that trade, let the market bounce around and expire in between these ranges. Does that make sense in a nutshell? Again, I'll direct you to another video to get some real in-depth info here. But that in a nutshell is what I'm looking for. Flat markets, staying within a range, no volume. So what could I have done here? Well, let me show you. Bought +1. Bought a binary for $82.50. Sold a binary at $19.50. So if this binary wins, I'd make about 18 bucks on the buy side. If this one wins, I'd make about 20 bucks on the sell side. And at the time of this example, it was up about $12 on both sides. But if that trade won, okay, the 4 p.m. expiration trade here, which is right here, okay, see I got in it here, boom, and it would have won. See that? I made about 40 bucks on that trade, okay? Jared's asking about, yeah, Jared, we do this with daily binaries, we do this with hourly binaries, and with 20-minute binaries. You're asking, does it work with 5-minute? It can work with 5-minute binaries, but it's hard to usually get the pricing you want on the 5-minute binaries. They move so fast. To get something priced good at 25-75 area, or 20 and 80, you can't always get them, but sometimes you can. But yeah, you can use this on any time frame of binary. Okay, so does that make sense in a nutshell what a butterfly is? Flat markets, range bound, okay, just like going back to our chart here. We're selling one up here, we're buying one down here. We just want the market to stay in the middle, and that's it. Okay, that's what we're looking for. But we have to be able to read the market there. Now, what are you thinking when you see that? What is the one, and be honest, every one of you thought it. What is your biggest fear when you think about, okay, I'm buying for 75 here, so I'm risking 75 bucks. I'm selling for 25 here, so I'm also risking 75 bucks. I'm risking $150. Granted, yes, if it wins, I could make $50. But I'm risking $150 to make $50. I don't know that I like that risk reward. Just raise your hand and admit if that's one of the first things you thought when I was covering this. Exactly. So you understand the concept here, right? You like the concept. You like giving yourself that range, right? But you're concerned about the risk. Okay? Scott says, well, at least one will win. What if the market shot way down here and came down here? This one will lose, but this one would win, right? Does that make sense? Yeah, if the market came down here and expired, this would lose, but this would win. But how much would you lose on this one? $75. How much would you make here? 25. So you're still kind of in the hole there, right? It wouldn't quite cover your loss, would it? Okay, so let's talk about that. Let's talk about when to do this and when to exit this trade. Because remember, I talked to you about being able to exit early. So if the market stays in between, they both expire profitable. We make 25 here, we make 25 here, so we make 50 bucks, right? So the most we can make on this trade is 50 bucks, right? So what is the one thing we know in binaries? Let's back up. Let's look at, I'm going to even show you something kind of way out here. Let me see. Let's even, okay, today's Monday, right? What's the one thing we know about binaries? Okay. Now, Jared, because I don't have time here, we only have 20 more minutes on the webinar here. Don't have time to quite do that here. But we do some on the videos you can take a look at. Okay. So let's take a look here. What is the one thing we know about binaries? When the strike price is right at the market price, that binary is priced around what? At expiration, it's worth 0 or 100. So what's right in the middle between 0 and 100? 50 bucks. So when the strike price of your binary is right close to the market, it's about 50 bucks, right? What about days from now? What's the closest? The market's at 109.09. 109.09. What's the closest binary to 109.09? This one right here, 109.25. I mean, it's still a little ways off, but that's the closest one. And look, getting close to about 50 bucks. That's at the end of the week. What about something tomorrow morning? 109.08, which would be right in between these two binaries here, right? We got 109 and 109.20, so 109.8 is kind of right in the middle. 44 and 60, right in the middle, about 50 bucks. Tonight, 9 p.m. Let's see here. What is the other bids on it? What's the depth? Oh, somebody's got a random order in there, but about 50 bucks, right? So we know that. We know that when the market and your binary strike are right at the same, it's going to be worth about 50 bucks. So what happens? I sold this one for 25. I bought this one for 75. What happens if the market comes all the way down here to this strike and hits this strike? I bought it for 75. What could I immediately get out of it and sell it for if the market comes down and hits it? 50. Okay, so how much did I lose? 25 bucks. Okay. If I had sold this one for 25 bucks, right when the market was in the middle here, I sold this one for 25 bucks. When you're selling, you're saying the market will be below, the market's going down. What do you think is going to happen to this binary if the market dropped all the way down to this binary? This binary would be getting down closer to 0, wouldn't it? Which is a good thing for me, right? Because I sold it for 25, it's getting worked down to 0, and I could get out of it and make, say, 20 bucks on it, right? Everybody follow me there? So, if I sold this for 25, the market goes all the way down here. Let's say I can buy it back for 5 bucks. So what did I make on this one? Sold it at 25, bought it back for 5, so I made $20 on this binary, correct? I'm up $20. But when the market hit this, so everybody understand that. Sell this one for 25, buy it back for 5, I made 20 bucks. Right? But when the market hit this binary, I got out of it. How much did I lose on this one? No, Israel says 50. Nope. I bought this one for 75. The market comes down and hits it, so I get out of it and I sell it for 50. So I lost $25. So I lost 25 on this side, and when the market hits this one, I'm going to close it at 50, and I'm going to immediately close this one as well. So how much did I lose on this whole trade? About 5 bucks, right? Let's just say our numbers are a little off there, so let's just call it 10 bucks. So I risked 10 bucks. I'm going to reality, I'm going to risk 10 bucks on this trade to potentially make what? 50. Is that a pretty good risk-reward ratio? How do I feel about risking 10 to make 50? I like that pretty good, right? So, does everybody understand? Remember I said a minute ago, hey, I know what all of your fear is, right? Buying for 75, so I'm risking 75. Selling for 25, so I'm also risking 75. I'm risking 150 bucks to only make 50. If you manage this trade properly and stick to the rules being if it hits one of your strikes, you immediately get out at 50 and you immediately close the other side out. You really only have a $5 or $10 risk on this type of trade. Does that make sense? George, this is the example right here, okay? We don't have time to stay in a trade until 9 p.m. because we have to be off the webinar here in about 20 minutes. But this is the example right here. You're selling an upper and you're buying a lower, okay? Does that make sense now? So you're not risking $75 on each side. You're following risk management, okay? And you're getting out when it hits one of the other sides. You're getting out of both sides, okay? So let's see here. Jared says, how do you buy it back at 5? Jared, I'm not sure what you mean. We just covered buying back. If you sold a binary, okay? So let's just say that I sold this one right here. All right. Say I sold this binary right here. Okay. Oh, I got to put 1 in there. Let's say I sold that binary. Okay. Well, as the price gets lower and lower, this binary is going to be more valuable. Okay. And when it gets more valuable, it becomes deeper in the money, and I can buy it back for, let's say it was this, 5 or 8 or whatever it is at the time. Okay, I buy it back. Or if I had bought this binary and it gets more valuable up to like one of these, 87 or 90 or 92, I sell it back. Okay, so yeah, exactly, for your profit. Yep, exactly. Yep. And yeah, George, I just manually exit them. Yeah, Jeff, exactly. Same thing if it were to move up. So if the market came up here and hit this one, well, I sold it for 25. It's now back to 50, so I'm losing 25 there, and I'm going to get out of it. But this one that I bought for 75, now that it's more in the money, right, just like these here, like maybe I buy this one for 71, but the market goes up, that means this one's more in the money, like some of these right here that I can get out of for like 90, 92, okay, at this particular time, as an example. Okay, so if you follow the rules there of getting out of your trade when it hits the other side, okay, that keeps your risk and reward in check. So some people say, well, why don't we go and get one, sell one way up here at like $10? And why don't we buy one way down here for like 90? Like, let's give ourselves a bigger amount of room, right? And that makes sense in your head, doesn't it? Well, oh wow, let's just make our range bigger. Let's give ourselves more room. And initially that makes sense in your head, right? Expand your range. Well, how do you follow rules then? When the market comes all the way down here and hits this one, what is this one going to be worth? When the market is the same as your strike, the binary is worth 50. So you bought this one for 90. Now it's only worth 50, so you're down how much? 40. What's the most you can even make on this when you sold at 10? 10. So you see what you did there? You thought, ooh, let's go wider out and make a bigger range. But you totally just jacked up your risk-reward ratio. Does that make sense? Does everybody understand why you don't want to be doing these with $5 and $95 binaries? Like, it initially makes sense to make a bigger range, but it messes up your risk to reward ratio. Plus, you know, if I'm buying this for 75, the most I can make is 25, right? If I buy it for 75 and it hits me and I get out at 50. It's 25 and 25. It's keeping a good risk-reward ratio. Okay? Charles, no, you need to go back and check out the binary basics. I don't think you quite understand how binaries will work, because this one up here, you're talking about this one that we sold for 25. If you sell a binary for 25, the most you can make on it is 25. Okay? If I bought this one for 25, it could go up to 100 and I can make 75, but I sold it. So when I sell a binary for 25, the most I can make on it is 25. When you sell, whatever the price you sell for is the most you can make. Does that make sense? Okay? So yeah, Scott said that the main thing here is to manage your risk and keep emotion out of it. Because what you're worried about is, oh, well, it hit my strike, but man, what if it pops right back up? Then I'm going to regret getting out of it. Yeah, but what if it keeps on going down and now you can't get 50 bucks from this one? You can only get 20. You got to follow those rules and get out when it hits that other side. Okay? So now some of you are also saying, well, hey, why don't we just, and let me clear something real quick here. So some of you are saying, okay, so I sell one up here and I buy one down here. All right, so the market comes down and the market hits this level. I understand. I'll close this one out for 50 bucks. But why not just leave this one open and let it go all the way to expiration to get every couple dollars I can out of it? All right, let's talk about that. Because some of you are saying, well, why do I close both sides? Well, What happens if the market comes down here? Boom, it hits this one, you close it for 50 bucks, you lose $25. Uh-oh, market's coming back up. What does the market do right here? Come up, come down. Say the market came down, boom. What if the market starts to go back up? And it hits this one. How much is this one worth? Oh, now I got to get out of that one and take another $25 loss. So I just lost 50 bucks on this trade because I didn't want to follow the rules and just close this one out, and I would have only lost $10 on the whole trade. It's not worth it. It's not worth it, right? It's like when you're looking at some of these binaries and you're like, oh, look, I bought this binary right here earlier today. And right now, or I bought this binary right here earlier today. And if I hold it to expiration, it'll be worth 100 bucks. I mean, right now I can get out of it at 92, but I'm going to hold on to it for another hour. Just get out of it. Get out. So when it hits one side, you close that side and you close the other side. Well, I could have held it to expiration and made another $5 or $7. Yeah, but you can also let it come back against you and lose 25. Take your profits and run, call it a day. Okay, Gary, does that make a little more sense? Because is that what you were wondering too, Gary, right? I did too when I first saw the strategy. I'm like, well, if it came all the way here and hit this, well, I'll just leave that one open. And you know what? Half the time it'll work. Half the time it'll work just fine. But those few times, the other half, when it comes back up there and hits you, you're like, man, I should have just got out. I shouldn't have been greedy about leaving 4 or 5 bucks on the table. I should have just got out. Because if you stay consistent with this, if you stay consistent, what is the potential profit on this trade? 50. If you stay consistent and follow the rules I showed you, what is your realistic loss approximately when it goes bad? About 10 bucks, right? So do you really want to get greedy and worry about the few times where it might not come back? Or do you just want to have a system, have a strategy with clear entries, clear exits, clear stops, and be consistent about risking 10 to make 50? I think I like those odds. And I think I'd rather just stick to it, be disciplined, and get out if I need to get out. You guys agree? Okay. So we spent a little more time on this particular strategy here than I wanted to. I wanted to be able to cover a couple others with you, but I really felt that this was important to, and I'm going to show you where you can get some other information on a few others here. But I thought this was really important because a lot of times people understand how to trade when the market is moving, right? Like that's not always so hard for us, is it? Like, well, what should I do here? Should I buy or sell here? I think we got this one, right? I think whatever strategy or system or indicators we're using kind of let us know when the market's in a pretty good trend, right? But where you guys, or where most of us all have trouble is, how do we trade this? How do we trade ranges? Hey, again, I get it, market's going up, right? But how can I trade some of this stuff? Hey, I'm a nighttime trader. I have a full-time job. I get home and I only have a few hours to trade and I pull up my charts and the market's not moving. How do I make money when it's not moving? How do I make money on a slow day when it's just kind of range bound, up and down and up and down, right? Well, that's what we just talked about. Okay, and you guys know, if you ever looked at charts or tried to trade when it's slow days or evening time or whatever, that, you know, how do I can't trade this. What do I do? Well, and that's how we do it, is right there, what we call a butterfly. Okay, so that's range bound trading. There's another type of trade that's kind of the exact opposite of this. but it still involves both buying a binary and selling a binary. And that's what we call a straddle, okay? And like I'd mentioned to you before, we kind of just covered the basics tonight of what we're looking for in here, all right? So if you hop on over to the Apex Investing website and you go into the binary section, you can watch some free videos. You'll see a video in there called Binary Butterflies and Strangles, and it gets a little more even in depth than what I covered tonight about how to do these butterflies. Talks a little more about volume and what is volume, a couple different indicators you can use to help you determine that it is a range-bound market, because we certainly know, right? We certainly know that we don't want this strategy on this type of trending day. It's just going to keep knocking us out, right? So the key here is to really be able to understand, hey, is it range bound or is it not? And I cover that a lot more depth in those videos. I also show you another strategy which is called a straddle, or I'm sorry, which is called a strangle, which goes through and shows you, hey, what about those days where the market's crazy volatile? It's not necessarily trending straight up, and it's not necessarily trending straight down. It's zigzagging all over the place, but it's going fast and there's volume. How could I trade that? How can I maybe buy and sell a cheap binary, not an in the money, but out of the monies? Maybe I buy an out of the money and sell an out of the money to scalp 20 or 30 or 40 bucks off of it when it pops up one way, and then get some more when it pops down the other way, okay? And it's kind of showing you how to trade crazy markets and how to trade flat markets. So again, hop on over to apexinvesting.com and sign up, get a free username and password. Go to the binary section and you'll see some step-by-step training courses, and you'll also see this detailed in-depth training of binary butterflies and binary strangles. Okay, like I said, I would have liked to have touched on them a little bit tonight, but I wanted to spend a little more time on this, and we had some really good questions here. Yeah, Enrico, I love trading spreads at night as well. Gary says, John, are there certain markets that are usually more flat at night? Well, Gary, the best way to think about that is this. First of all, first and foremost, when you're trading at night and you're trading on Nadex, everything is open, meaning, the indices, like, you can go right here to indice binaries. All the U.S. indices are open, the Dow, the Russell, the S&P, but there's not much going on with those at night, right? Those don't really move. What you're looking to trade at night when you're trading on Nadex is Forex, okay? So what are some markets you might want to be watching, all right? Okay, well, what two markets are open in the evening? What markets open up overseas, worldwide? What are two of the major markets that are on Nadex that open up, say, 7 or 8 o'clock Eastern time? Yep, exactly. Australia and Japan, okay? As far as, yeah, there's plenty of others, but yes, as far as these particular pairs here. So Aussie pairs and Japanese pairs are probably going to be moving the most this early in the evening, right? Okay, and Gary's right about Europe, but Europe really gets moving more in the middle of the night, say about 3 a.m., right? So if you're trading like this time of night, the pairs that are probably going to be moving the most are any pairs that are Aussie or yen, Aussie dollar, euro yen, pound yen, dollar yen. Those are the ones that are probably be moving the most, okay? So you could say, all right, well, then I want to look at pairs that are not, Aussie or yen. Well, you can do that, but you can still look at some of these pairs that are even moving, but you also want to be very aware of news. Hey, is there news coming out tonight? Are the markets just flat right now because they're flattening out before a big news event that's going to hit in 30 minutes? And what I thought was a flat market's about to turn into a crazy market. So I want to be aware of news, all right? And you can go to the Apex website there, and there's a free news calendar letting you know of, news coming up. So the first thing I would say to look for there, Gary, is news. And secondly, maybe check out those pairs that are not moving as much at that particular time. Okay, yeah, Osman, NZD is moving great, but NZD is not one of the options here for the Nadex binaries. Okay, let's see here. TJ, we do some of that. It gets a little more advanced. We do have some info on our site about some of those, 3 and 4 leg butterflies and condors and stuff like that. So, Eric, I'm not sure it will be. That would be a good thing for Nadex. I would tell anybody that would like to see NZD pairs on Nadex, send Nadex an email. Give them a call and request it. The more requests they get for something, the more likely they are to do it. We've gotten many things through by getting a lot of people to ask for it. So I'd love to see them on there. I love the NZD pairs, especially early evening like this. Oh yeah, they start to move. Okay, so let's see here. Did this help at all, guys? Did this help you? Some of you might have heard this webinar before, or familiar with this. Some of you might not have ever heard of the concept before of butterflies. Some of you have been struggling with trading markets that aren't moving, and you think there's really no way to trade them, but I think I've shown you here that there is. Okay, so definitely check out this strategy, play with this strategy, demo trade this. Don't just hop in and start doing these live left and right. Learn how to read the markets. Okay, first of all, go to apexinvesting.com, get a free username and password, watch the in-depth video. Under the binary section, watch the video, binary butterflies and strangles. Get it down, understand the rules, start to demo trade it, and you'll see that you can definitely start using this. Okay, let's see here. TJ, I'm not sure of that. Not sure of that. No information on that here. So, Lori, good. All right, Scott says, I viewed the old lessons on Apex last week. Okay, perfect, Scott. Good. Glad you got to see those. Eric says, I'm demoing it as we speak on the pound dollar. Awesome. Awesome, Eric. Yeah, I love pound dollar. Pound dollar and pound yen are two of my favorites Forex pairs to trade on Nadex. I love them. And they've moved pretty well too. Okay. All right, guys, I appreciate your time tonight. This webinar was recorded, and it will be up on the Nadex video archives here within a couple of days. Between now and then, hop on over to apexinvesting.com. Check out the full complete videos on it. If you have any questions, feel free to send us a message or a help desk ticket there on Apex. Otherwise, we hope to see you next Monday and each and every Monday. I believe you're going to have a special treat here the next couple of weeks. You may not have me on the webinars the next 2 weeks. We may have Daryl Martin on. Some of y'all haven't had Daryl on in a while here. We may have Daryl on with us the next couple weeks. We're going to be talking about the Greeks of Nadex spreads and the Greeks of Nadex binaries. Some of you are saying, what in the world are you talking about, Greeks? Just kind of how options work with delta and theta and gamma and beta, and kind of really get a little more technical about why things are priced the way they are and kind of how options work. And I think we're going to have Daryl on running those for us here. So Gary says, Daryl, who? Is he still around? He's around. I don't let him out of the cage very often, but he's here. All right, guys. Well, thank you very much. Great questions tonight and great feedback. Hope this helped. Let us know if there's anything we can do for you, and we will see you next week. Hope you guys have a great night tonight and good trading day tomorrow. Thanks so much for being on with us. Have a great one. Thanks, Craig. Appreciate it.